Okay, Julie. Okay, guys, it's exactly 6:30, and let me get the show on the road. So let me just share my screen and start recording. Well, good evening, everyone. Our room is full and bursting. Welcome to our VectorVest webcast, a proven approach to build wealth quickly and safely on the London stock market. The approach could be used in any of the stock markets that VectorVest in factly supports. And with the VectorVest UK subscription, you get the US, Canada, a whole of Europe, apart from Scandinavia, and Australia. Okay, so and there are many advantages, in fact, to applying the methodology in the US, which I'll come on to in a second. But first thing I have to do, which is unfortunately aimed solely at the UK people listening. As you probably know, VectorVest is the pretty much, I think, the only organization selling investment software and investment education that's in fact authorized by the regulator, the FCA. And although I am qualified to give financial advice, I can't do so because I haven't sat down with you and done one of those long and detailed fact finds that your financial advisor will have no doubt done with you. I'm allowed to talk about those shares that I own myself, and I do that not to make myself sound clever, but to show everybody the process and to show everybody that I'm not that I'm walking the talk. And if nothing else, if I make a mistake, hopefully you'll learn from the mistakes, and I certainly do make mistakes. So I can talk about those shares, but I have to make it very clear that although those shares are suitable for me, they may not be suitable for you. So that said, we can move on. My objective is to show us all how to invest with confidence and outperform the market in a few minutes work every evening. And the methodology that I'm going to speak about doesn't take a great deal of work, but sometimes there is something to do. Okay, and when there's something to do, it tends to come all at once. So I certainly don't look at my worry-free portfolio every day, but I certainly look at it in 3 or 4 days a week, and have a long look at it over the weekend. And that's, I suppose, the objective. The objective is to show people how to actually build wealth in 3 ways. And I'll get my trusty pen out here. The first way may seem, that's the laser, sorry, pen. The first way may seem obvious, but the first way, of course, is just simple capital growth. And we want to find shares that are, in fact, going to rise in price. That may seem obvious. Secondly, we want shares that will pay a dividend, and even a small dividend. And if we put that into the mix, and if you sit down and do one of those Excel spreadsheets where you add in the dividends with the reasonable capital growth, you will be absolutely amazed at how fast money grows. Einstein said it was one of the wonders of the world. So if you want to motivate yourself, sit down with an Excel spreadsheet and just work through that exercise. I had to get my son to do it. I'm hopeless at that sort of thing. And the third thing, Bruce, if you're listening, which we can't do in the UK, is to use the most conservative of all option strategies, which is called a covered call. And you can write options strategically on the shares that you hold for extra income. And again, you can add that into the mix. Now, the VectorVest people in the US are really, really good at that. And there's a guy called Jim Penna who runs the retirement services, who's quite an ace at that. And covered calls are the most conservative option strategy. And they tell me across there that if you write covered calls on the shares you own strategically a couple of times a year, that you can quite easily get yourself another 6 to 8%. added into the mix. So 3 or 4% dividend yield, another 6 to 8 from covered calls. That makes such a difference over the medium term. So that's the objective of the exercise. In the UK, covered calls, folks, are just not on because the options market, especially writing options, is largely doesn't exist at the retail level. Stan Heller, who in fact runs VectorVest in Canada, tells me the situation is pretty much the same in Canada. So the options market at the retail level, i.e. us, is really only liquid and very liquid in the US market. So Bruce, that would be a big advantage in terms of really putting your foot on the petrol and making your capital grow by getting some knowledge in covered calls. That doesn't exist in the UK market at all. So those people that are watching on YouTube, well, you can see me. That's yours truly, folks. Unfortunately, the wrong side of 66. That photograph taken pretty much 2 years ago on my last trip to the US, December 2019, just before the COVID portcullis fell. And I'm hoping, I really am hoping, that the annual VectorVest 2-day event in Tampa will be running live, and that I'll be going to Tampa in January. I'm just really hoping that that's going to come off. Let's see what the next few days brings. So unfortunately 66, I've been come 2023 will be 40 years in markets. I put on my first trade in October 1982, and I've got a degree in engineering, I've got an MSc in metallurgy, I've got a PhD in mathematics, and I was working for De Beers, the diamond people in South Africa. I went to South Africa from London to play rugby, to play professional rugby, and I was working at De Beers, and I noticed an old fella share trading, and I did the same myself. I saved up some money, put on my first trade in October 1982. It was a winner. And while working for De Beers between October 82 and April 88, I traded and traded reasonably aggressively. De Beers, in fact, one of their ex-staff members had trained to be a stockbroker, and he was on the floor of the Johannesburg Stock Exchange, and an old fellow called Dr. Solinsky, and he in fact did all our trades for us. And in April 1988, by fairly aggressive trading in the Johannesburg Stock Exchange, I actually made 3 times what I earned from De Beers. So I cut the corporate umbilical cord in April 88, and I've been trading on my own ever since. I've had interest in other businesses along the way, but I've mostly been trading on my own. For the last 10 or 12 years now, I've been helping to improve performance of retail traders with VectorVest. Started in South Africa, then moved to the UK, and then recently I've been helping in the US as well. So that's me. But this seminar is not for about me. It's about you. So that's my agenda, folks. I'm going to do my best to work through this. First of all, the VectorVest system of analyzing shares. And during the course of the next 50 minutes, I tend to use the word shares and stocks interchangeably. They mean the same thing to me. Second thing we're going to talk about is market timing. And we firmly believe at VectorVest, and I firmly believed well before VectorVest, that the most important thing to know is whether the overall market is rising or falling. If the overall market is trending up, then it's quite easy to make money. If the overall market is not trending up, then you need to be near a genius to make money. And I found that out in 1988, because I sat down in 1988 when I didn't have the luxury of a salary coming in every month, and I looked at all my trades from 82 to 88. And I proved categorically, and it was quite a revelation to me at the time, that when the general market was going up, I made good money. And when the general market wasn't going up, I struggled. And as I say, that was quite a revelation to me at the time. And then what we're going to try and do is to actually round it all together into a fairly simple and robust worry-free investing strategy that's simple to execute. And folks, the execution is absolutely key. It's so easy to do a bag full of back testing and have this wonderfully curve-fitted, very complicated strategy. But with those types of strategies, it's very, very difficult in a real-world environment to replicate that performance. So we need something that's simple, that's easy to use, that can in fact be applied without a great deal of effort, and that's what I'm going to try and put across. And it's had a great run in the UK. I tested it till I was blue in the face until about 2016. I started to use VectorVest in 2010. I back tested and I back tested and I back tested. And in 2016, I said, no more back testing. Let's trade this going forward with real money. And that's what I've been doing. And I do my best to report on that on Monday afternoons. So you can see the performance and my performance as much as the strategy's performance, warts and all, good ones and mess ups. So the VectorVest system for analyzing stocks and shares. 3 words that are important, folks: earnings, inflation, and interest rates. And clearly, if you've been anywhere near a newspaper or TV recently, the big thing is inflation. And clearly, earnings, profits, inflation in the general economy, and interest rates in the general economy. And normally, when inflation goes up, interest rates go up as well. So if earnings go up, inflation goes down, interest rates go down. That's good for valuations. And similarly, if earnings go down, inflation goes up, and interest rates, in fact, go up. That's really, really bad for valuations. Dr. Bart Dolido has put together a valuation algorithm. And it's fully revealed in chapter 3 of his little book, Stock Strategies and Common Sense. And if you're of an analytical background, Dr. Dolido, the founder of VectorVest, has got a PhD in chemical engineering, very, very capable guy. And if you're up to it, you can work through that with your pencil. It's not suitable, folks, for a presentation. You would all fall asleep on me, but it's there if you want to go through it yourself. So you can see at a glance the following. What's the stock really worth? How safe is it? How reliable has that earning stream been? And when to buy, sell, or hold? And the first 2, folks, are fundamental measures of the company. And this is a technical measure of the share price. I define fundamental analysis as the search for the true value of a share. I define technical analysis as the study of trends and turning points of the share price itself. And this goes through the whole of VectorVest. At VectorVest, we advocate what a friend of mine called Zach Meir refers to at VectorVest. He calls us the best of both worlds. Wants the best of fundamental analysis mixed with the best of technical analysis. And whether you're building a growth portfolio, which I'll be talking about at the Investors Show tomorrow, whether you're in fact swing trading over a few days and a few weeks, or whether you're looking at a long-term methodology such as I'm speaking about tonight, I'm doing those 3 presentations tomorrow. A key of any VectorVest approach is the ability to get the best of both worlds, the best of fundamental analysis and the best of technical analysis. And this is quite strange because the 2 approaches rarely exist in the one body. Fundamental analysts look at technical analysts as if they're going to, in fact, read the tea leaves. And technical analysts reckon that fundamental analysts are, in fact, reacting to data that could be 6 months out of date. So there's not a lot of love between those two fellows. So let's look at the various VectorVest metrics. The first measure of value, the second measure of value we're going to look at tonight. The first measure is the actual value of the share itself. Yeah, Julian, the show was on Friday. Did I say something else? Maybe I said Saturday. Okay, I got myself confused. The show is in fact on Friday, folks, not tomorrow. Relative value, as the slide says, is an indicator of the long-term price appreciation potential of the share in relation to a corporate bond. Now, for long-term, read 3 years. And relative value measures how much more money the share price appreciation potential is going to give you in relation to what a corporate bond would pay you in the same period. Okay. Now, how do we do this? Well, we forecast the earnings of every company in the London stock market for the next 3 years. Now, we do that in 2 ways. We extrapolate from the financial statements, and we buy an earnings forecast from the world's top provider of such a company called FactSet. So we have a number for the profits of the company next year, the year after that, the year after that. We assume that those earnings will be discounted into the price at some time over that 3-year period. Not when, but just within that 3-year period. And we work out what that projected price will be. We take the projected price and we subtract the price today to get the upside, and we divide that upside by what a corporate bond will pay in the same period. So what we're measuring is how much money the share price will give you in relation to what a corporate bond will pay you over the same period. Now, less than 1 is not good, because that's saying that your share is going to appreciate less than what you can get from a corporate bond. And those of you that understand the pecking order of how these people get paid will know that the corporate bondholders get paid a mile ahead of the common shareholders. Greater than 1 means outperformance. That's not bad. And ladies and gentlemen, we have in fact done enough backtesting to realize that if the relative value is greater than equal to 1.25, that will give us the capital growth that we need in our worry-free portfolio. So the very first metric that we're going to look at to build a worry-free portfolio is that the relative value, or the share price appreciation potential in relation to a corporate bond, must be higher than 1.25. I've tested that. Our fellows in North Carolina have tested that, all over the world. And locally, we've got a first-class researcher from our Guildford group who's researched that and presented that at our meetings. So that's a very, very first metric for our worry-free portfolio. Okay. The next VectorVest metric is relative safety. Now, this is an exact number, folks. In relative value, we predict the future. And as Mark Twain said, the future is a very slippery commodity. But in relative safety, we look at the cold, hard numbers from the past. So we look at the balance sheet, the income statement, the cash flow statement. We look at dividends, dividend safety, dividend growth, margins, free cash flow over the last 6 years. And we buy that data from Thomson Reuters. The Dr. DeLito's algorithm sucks up all the data and spits out one single number which measures the relative safety of the share, which measures the consistency and the predictability of a financial performance. Again, less than 1 is not good. This is saying that the numbers have been up and down, in and out, and certainly not suitable for a worry-free, hands-off portfolio. They may be suitable for spread betting or short-term swing trading, where you're managing risk very tightly with stop-loss orders, but for a hands-off portfolio, not. Greater than 1 is not bad. And for our worry-free portfolio, we want this relative safety to be right up there, 1.3 to 1.4. When you get up to that level, folks, this is a company making money, and all the financial metrics are getting better. Invariably, it'll pay a dividend and have a strong history of growing that dividend safely. And that's our second parameter for our worry-free methodology. So I want to try and find a stock that where the share price, the profits the company makes should push the share price significantly ahead of a corporate bond. And I want the share to have a history of doing this safely. Now, these are very special stocks, and there's not that many of them on the London market. And we're talking about finding shares and companies that have got the ability to grow very safely. And this is a great place to be. With those two numbers, I firmly believe that you can outperform the market significantly with nothing else. These are very, very special stocks. Bruce mentioned the US. Bruce, there's an awful lot more of them in the US market. There's enough of them in the UK market to get by on, but an awful lot more on the American market. So those are the first two things we would look at: relative value and relative safety. Dr. Leto's also got another metric called relative timing, which is a measure of the short-term trend. And certainly, if I was doing a talk on short-term swing trading, this is a really, really important number. Not so important for what we're doing tonight. And then what Dr. Leto has done as a default is that he's rated all of the stocks on the UK market, on all markets, by his master indicator VST, value, safety, and trend, where he's put together relative value, relative safety, and relative timing into the one comprehensive indicator. Now, again, if we were doing a talk on momentum trading, that's without a doubt the best sort. But we're not doing that tonight. We're doing a talk on hands-free trading. We want the ball to do the work. And I'm going to sort all of the shares in the London market by relative safety to bring the safest ones to the top of the pack. So I'm looking for stocks, folks, with an impeccable track record of both growth and safety. As I say, there's not many of these, but they are a very painless way to get wealthy. Now, many people are in the stock market. They've got their pension, got their house paid for, they've got their pension paid, and they've got a small amount of money they want to have a bit of fun with. I'm not like that. Everything I've got in the market, everything I've got is in the market, and I manage my own pension, and most 80% of what I've got is in high RB, high RS stocks. If I were managing your money, those are the stocks that I would put your money into, and I managed an awful lot of money for high net worth individuals when I lived in Cape Town. We put a stop loss to every share in the market every single day. And the stop loss is based around a 13-week moving average, which is adjusted for the fundamentals. If the fundamentals are really good, we widen the stop loss. And this is the stop loss that's automatically calculated every day. You can place it on your chart, and this is the stop loss that we're going to use for our worry-free technique. And finally, you'll be glad that there's no more definitions. We put a buy, sell, or hold to every share in the market every single day. And to qualify for our worry-free technique, the share has to be either on a buy or on a hold. Clearly, if it's below its stop loss, we don't want it. Okay, so the criteria. So the main criteria is relative value, and I'll repeat what it is. Relative value is the share price appreciation potential in relation to what a corporate bond will pay. We want that to be greater than 1.25. In other words, the share price should outperform what a corporate bond will pay you by 25%. I want the relative safety to be greater, high as possible, 1.3 plus. And I'm looking for shares that have got this very difficult to find in the UK mixture of safety and predictability of earnings and growth. And they do exist. And VectorVest finds them very quickly indeed. They're a really great place to park your retirement money. That's what I'm doing. So let's look at VectorVest itself for a second. Get rid of all my lines. Go to the program. This is VectorVest UK, folks. And not a lot of information on this. We're going to go through this in a moment. But if I go to viewers and I go to the stock viewer, been in this a dozen times today. This is we're following 2,102 companies on the UK market. These are all of the companies rated by Dr. Toledo's VST. Let's have a look at a company that I'm holding at the moment, which is Cape Tech, and I bought into it again. I added to it yesterday, I think, or the day before. It's trading at £4. We believe it's worth $6.71. It's the first VectorVest proprietary metric, which is calculated by Dr. Toledo's algorithm. It was up 7 pence yesterday, which was 1.78%. Clearly, you can get that from the paper for free or the internet for free. Now, the second proprietary number is relative value. And relative value, as I've said a few times, measures the share's outperformance over a corporate bond. And at 1.81 on a scale between 0 and 2, that's incredible. That is anything above 1.4 is excellent. And that's right up in the bloody marvelous category at 1.81. The relative safety is 1.42. So this is one of the companies that we're looking for, folks, that's undervalued, that's got this wonderful mixture of growth and safety. It's on a buy recommendation. There's the stop loss. Now, I didn't get a chance or time. CI measures the long-term trend. So RT measures the short-term trend, CI measures the long-term trend. Both those are good. And GRT measures the percentage annualized earnings growth next year. At 41%, that can't be bad. And a big part of GRT, folks, goes into RV. So there's a great deal of belt and braces between those two numbers. So that's certainly a worry-free stock. Okay. This is Italia Mining. It's a copper stock, but it's a miner in Spain. Normally mines are in countries with ghastly politics, but this is a copper mine in Spain. It's undervalued. It's got a high RV, 1.67. It's got a really great relative safety, which is really strange for a mining company. And as you can see, VectorVest anticipates it's going to grow earnings at 34%. Now, you can find these companies just from the stock viewer. Okay. And we have a lovely lady who runs our London group called Susan Thornborough, and that's what she does, and she shows everybody how she does it just from the stock viewer. But in a second, I can look at Unisearch, and I can put my RV and RS into Unisearch, and Unisearch will find those companies for us in a click. Okay, and I'll show you that in a second. So we want to use the power of VectorVest to find stocks that are growing strongly and safely. A great place to put your money. And in the words of my old rugby coach, we want to let the ball do the work. Let's go back to my PowerPoint presentation. Remember I said earlier that my research and Dr. DeLito's research shows categorically that 70% of the exercise is working out what the overall market is doing. So at VectorVest, we firmly believe that if the overall market is trending upwards, that we should be fully invested. And if the overall market is falling, that we should in fact be very careful, not buying any more stocks, and watching our stop losses very carefully indeed. And rising stocks and rising markets. And that's Dr. DeLito. Being on the wrong side of the market is the worst thing that can happen to an investor. It doesn't have to happen to you. That's my metaphor for a stock market, folks. I haven't been on one of these contraptions in about 40 years, but I'm quite sure they still do the same thing. They take a very long time to get up there, and then they fall rapidly. Has anybody been on one of them more recently than 40 years? Maybe you can confirm that they're still doing that same thing. Anybody been on one of them more recently than 40 years? Stock markets take forever to get up, and then they fall very quickly indeed. Okay, do they still do the same thing, Julian? Long time up, very fast time down. So that's the front page of VectorVest, folks, and that's where we were a second ago. And I'm going to go out of my PowerPoint presentation back into the program because the program, in fact, that's America. The program, in fact, is a bit bigger for you to see, and I can make it even bigger still. Now, arguably, I believe the two most important words on VectorVest are these two: up and up. The first word refers to the short-term trend of the London market, which is up. And the second word refers to the long-term trend of the London market, which is also up. So both the short-term and the long-term are up. And very important to our discussion this evening is this call to the right-hand side. And at the moment, for the last 3 days, we've had a confirmed up, which is the longest measure of the trend on VectorVest. And the confirmed up is no more than the underlying trend confirmed by 2 weeks price action. As you can see, the underlying trend here was up for 3 days, but we still had a confirmed down. That's because it hadn't risen for 2 weeks, 2 5-day periods in a row. The confirmed up is the signal that we use for our worry-free technique. And I think that probably 80% of all of the users on VectorVest here and in the US use the confirm call signal to tell them when it's safe to be in the market. Now, if you're a spread better, if you are a short-term trader over a couple of days, we have other market timing systems for that. But I think most people use the confirmed up, and it's part and parcel of our worry-free technique. So to work out whether the market is rising or falling, all you need is a quick glance at the front page of VectorVest. Now, VectorVest comes on your phone these days. There's a really good app for both the Samsung phone, what's it called, Android phone, and the iPhone. And you can see whether the market is rising or falling at a glance. So that's something to do before you get out of bed in the morning. We then have this very colorful little traffic light. And the traffic light measures the strength and the momentum of the short-term trend. And as you can see, after the close yesterday, the momentum of the short-term trend is good. VectorVest advocates buying safe, undervalued stocks that are rising in price at this time. So we have a confirmed up in place. We've got an up in place, and the little pointer and the advice is saying yes. In our worry-free technique, we want to have a confirmed up in place, and we want the pointer to be in the green to give us permission to buy stocks. So let me show you what this is all based upon. You don't have to know what it's based upon to make a decision as to whether the market is rising or falling. But I'm going to show you anyway. Lisa, hi Lisa. Lisa says, how many more days have it confirmed up? More than 3 days. It's just started, Lisa. Normally the confirmed up signals last for many, many, many weeks and months. So it's just started. So I'm hoping, nobody knows what's going to happen next, but I'm hoping that this is going to take us right into the new year. Okay. Could easily take us into next May, April, May, with any luck. Does that help? Nobody knows for sure, but I'm hoping it's going to take us into next May. Thanks, Lisa. If I click on timing here and click on the market timing graph, I can pull up this chart. And this, ladies and gentlemen, is the VectorVest composite. So it's not the FTSE 100. It's a composite indicator of all of the shares that we follow, those 2,200 shares. And let me go back to the COVID sell-off. This is the broadest measure of the stock market that I know of. Now, on the left here, we've got all of the VectorVest market timing systems, and I could, if I had the time, explain how they're all constructed. And if you come to my Monday afternoon sessions, if you come to and read the essays that I do, I actually go through the definition of all of these in a fair amount of detail. However, you don't need to know how a watch works to tell the time. If I click on confirm calls, it populates the chart with the signals. And there's a confirmed down, that was COVID last year. There's the confirmed up last April. And Lisa, you see how it lasted quite a long time. Confirmed down came to nothing. And this lasted many, many months. And that's the confirmed up that fired the other night. And I'm hoping this is going to go for a long time. I don't know, Lisa. I don't know. We just got to watch it. But invariably, we get a reasonable move out of this long-term signal. So the basis of the worry-free technique is we want to find shares that are growing strongly and safely. Great place to park your money. It's where 80% of my loot is parked. We want to be fully invested when the market is rising. When the market is falling, most of these sell-offs come to nothing. But when the market is falling, we want to be careful because we don't know whether we're going to get a small little pullback or whether we've got one of these. We just don't know. Now, these two pullbacks, this happened in November last year and this happened in July, came to nothing. This is the biggest pullback that we've had since COVID. And this is on interest rate worries, inflation worries. And we seem to have got over that. And we're now going again. I'm hoping seasonality, Lisa, is very good for a run up into Christmas. We shall see. We shall see. So the methodology is quite simple. When you get a confirmed up, we want to be fully invested in high RV, high RS stocks. When we get a confirmed down, we're certainly not going to buy any more. We want to watch our stop losses carefully. In that pullback, I didn't get stopped out of anything. In this pullback, I didn't get stopped out of anything. In this pullback, I got stopped out of 3 or 4 shares. Okay. And I'm busy getting back in again now. In this pullback, I got stopped out of everything. That's the first time that that's happened since 2008. So down here, in March, April last year, I bought in, my portfolio was full in cash. And that's the process. A relatively simple to execute process. And largely, there's been nothing to do since April until a week or two ago. Now I'll show you the performance. The performance has been great. This is a great place to park your money. And I know that many people are running a worry-free portfolio and they're also trying to do short-term spread betting. And the rationale for short-term spread betting is that they're going to make much more money. But unfortunately, if you want to get close to the market in the noise, you've got to be very good to make money. And if you look at the spread betting stats, they say themselves that 80% lose money. I'm not saying that it's not great fun to be a short-term trader. I've been doing it half of my life. But you've got to be very good in there to take some money off the big guys. So most people make more money, in fact, ignoring the noise and going with the big trends. If you don't believe me, just have a go. Just have a go. So that's the basic methodology that we're going to try and so let's see how to put this all together. How to build and manage a worry-free portfolio. Well, we're going to do our best to try and use Unisearch to do the hard work for us. And Unisearch is incredibly powerful. We have a young man in the UK called Mark, and well, I think he's in Malta at the moment, but I think he knows more about Unisearch than anybody else in the VectorVest world, and he writes some magnificent but very complicated Unisearch for short-term swing trades. And he's managed to, in fact, code some of my short-term methods that I didn't think could be coded, but he managed it. What I'm going to present today is a very, very simple Unisearch that finds stocks, as I say, that are growing strongly and safely. Simple as that, with a reasonable liquidity. We're going to try and find the UK's best stocks. The parameters need to be tested. My word, have I tested. The US is tested, and our customers have tested as well. I don't want a lot of activity. This is a worry-free portfolio, hands-off portfolio. And I want the methodology to work for small accounts and for big accounts. So when you start small and you build, maybe you get some confidence and you put more money into it, that you don't have to change anything that you're doing. Now the key is relative safety. We want the relative safety to hold up certainly well above 1.25. And at the minute you can get right up to 1.4. We want earnings to be strong, and we want annualized growth rate to be well above inflation, and that all comes down to an RV of greater than 1.25. And that's the simple little Unisearch, which is on your VectorVest system. It's called Long-Term Winners RS Descending. It looks for shares that are greater than equal to 50 pence. That 50 means 50 pence. So I'm ignoring all those 2 and 3 pence AIM stocks. I put a small volume traded of 50,000 shares. This is not a trading search where you're in and out, so the volume doesn't have to be that high. If you're starting with a huge amount of money, then you may want to push that up a little bit, or maybe just look at FTSE 350 companies where the liquidity is pretty good. So you're going to have to judge that to the level of your exposure. If you're starting off modestly with 10, 20, 30,000 pounds, then the 50,000 should be more than adequate. All right. In this particular search, that little double arrow means not. I've excluded AIM stocks, but certainly over the last little while we've had some magnificent results from AIM stocks, so you can quite easily take that out. There's the relative value greater than 1.25, and the stock should not be on a sell. By inference, that means the stock's on a buy or a hold. And I'm sorting all of the shares that come out of this by RS descending. In other words, bringing the safest stocks to the top of the pile. And I'm going to use the confirm signals. We saw those blue and green triangles. Lisa, let's hope they last. And this one keeps going till next May. That's not uncommon, folks. That's what the seasonality, in fact, suggests. And that's the chart. Okay. And that's the performance, folks. There's only one worry-free stock has let us down, and that's Avon. Avon Rubber, it's now called Avon Protection. They dropped the ball. They were selling gas masks to the American military, and they dropped the ball. I think the share's starting to look interesting again, but we need to give it a day or two yet. It dropped the ball. It should never take a 32% loss. So I'm going to do this for us now. Get rid of that. I'm going to enter the portfolio, enter the program. I'm going to go to Unisearch. There it is. Now, I actually teach this as a part of my ISA Millionaire course. And there's the long-term winners search. Okay. And you can test this to your blue in the face, you can go back in the data. I'm going to go back to last April when we got that confirmed up signal. It was the 27th of April. That's after COVID. And if I run the search, that's what we got. There's even rubber at the top. And I can simply quick test the top. If I quick test the top 10, we can see that that portfolio has doubled the performance of the market. And along the way, all of those stocks have paid really, really, really good dividends. And I had most of them. I got stopped out of Avon. In the sell-off over the last week or two, I got stopped out of Lion Trust. I got stopped out of CRL. I got stopped out of GAW. The rest of them, I think, are still running. So that is a really good outperformance. That's 43% annualized. I'm not promising that every year. We then had another confirmed up last November. So if you'd started last November, on the 11th of November, on the search that day, see Lion Trust was right at the top. Pershing Square, I'm still holding. CCC, I'm still holding. Lisa asks, what brokerage firms do you recommend for these trades? Lisa, unfortunately, the regulator doesn't allow me to recommend a brokerage. I'm sorry about that. We need to be authorized at a higher level for me to recommend you a brokerage. I really am sorry about that. So from last November, if I do the same quick test, we've trounced the market. The market's up 16-17%. This is up 28%. And I assure you that if you do that little spreadsheet exercise, that outperformance over a number of years will make you very wealthy indeed. So this is a great, great place to be. I put 80% of my money into these types of stocks, and I put 20% into shorter term swing trades and more speculative ventures. In the last year, the worry-free stocks have all performed, and my two gold stocks, which were in fact speculative, to say the least, anything close to gold is speculative, have let me down. They paid very good dividends, but their performance has been awful, absolutely awful. Again, we've got one loser in this, Cranswick, and I got stopped out of Cranswick a couple of weeks ago. Gold will have its day, but it's been difficult. It's been really, really, really difficult. So if I go back into my PowerPoint presentation, and by the way, guys, you can do all of that for yourselves. This is just a day or two old. That's from last year, 60% then, 21%, so that's got a little bit better. There's the performance in 2019. 2019, from the start of the year to the end of the year, we were up 48%, with one Pearson let us down. And then, of course, in March 2020, when COVID hit, I gave back 15% of that, because the market went down by 15% before I got out. So still not bad. That's the equity curve on 2019. 2019, folks, there was two trades just there. Two trades the whole year. And our £50,000 went to £72,000, excluding dividends. Let the ball do the work. Tested this in America. That was the equity curve over 20 years in the US. And clearly it soared up since I'd done that. But as I said a second ago, I haven't done any testing, back testing, since 2016. I've been testing it very successfully going forward with real loot, i.e. my own real loot. as I say, 80% of everything I've got is in this methodology. It's quite simple. We want to find shares that are growing strongly and have a track record of doing that safely. Every now and then one of them will drop the ball. Pearson dropped the ball, Avon dropped the ball, but it's 1 out of 10. That, believe it or not, over that 20 years, that's a 17% annualized growth. And they all paid 3% dividend yield. And Bruce, if you're listening, if you're in the American market and you're in these types of stocks, very, very easy to write covered calls. And I'm not the best man to teach you how to do that, but we have a chap called Jim Penna in the US who's an absolute whiz at that. So, and he runs the retirement program, and a big part of the retirement program is to use options to produce extra income and to produce options to manage risk. In the UK, the only way that we can manage risk is with stop loss orders, because the options market is utterly illiquid at the retail level. So a relatively simple system. When we've got a confirmed up, we want to be fully invested in worry-free type stocks. When there's a confirmed down, do nothing. Just if you get some more money, don't buy any more stocks. Watch your stop losses carefully. If a stop share closes below your stop loss, then do your best to find the courage to get rid of it. When we get the next confirmed up, then you've got cash. You can now get back in and buy some more stocks with a high VRV and a high RS. Very, very simple, very straightforward, and easy to execute. So I have to put on my salesman's hat now, folks. If you want to know how to put that together, well, you can try and do it yourself. That's me, in fact. Well, somebody who full head of hair. I had a full head of hair once, but I tried to keep the fundamentals under control early on, and it didn't work. I just didn't have the time. I didn't have the inclination. I didn't have the skills to keep the fundamentals under control. When I started this in the 1980s, when I was working for De Beers in the 1980s, I was playing rugby for Transvaal. And we were playing to 60, 70,000 people every Saturday afternoon. Played at the opening of Ellis Park against a World 15 with 85,000 people in the crowd. Unbelievable. So the last thing I wanted to do was to fight with annual and interim reports. So I in fact, started to trade pretty much technically. And then when I found VectorVest, it was the answer to the proverbial maiden's prayer, in that I now had this tool that would do the fundamentals for me. I had my own CFA on the computer. So if you want to break out, folks, I'm sure you've suspected by now, I've got a plan for you. And if you give me 30 days, even if you've never been near a market before, Lisa, if that's you, if you roll up your sleeves and you work with me, I can show you how to be consistent in the stock market. And there's not that many people who are consistent in the stock market. I put together a little course which is built into VectorVest, which will do this for you. There's 5 bits to the course, and I'll go through it as quickly as I can. The first is the detail of how to analyze any stock in 30 seconds. So that's the detail of value, relative safety, relative timing, the stop loss, and the buy, sell, and hold. Plus GRT and CI that I only glanced over. So that you can actually tell whether a stock is good or bad in a few minutes. And then number 2 is all about risk. And that's essentially getting rid of the bad ones. To be able to size your positions correctly, to optimize your risk-reward ratio. So in module number 1, we'll show you how to separate the good from the bad. And module number 2 will show you how to get rid of the bad ones. Module number 3 is all about market timing. Once it's safe to be in the market. So once you've got rid of your bad ones, you've now got some cash. When's it safe to buy in again? And that'll be the detail of the VectorVest market timing systems, such as the confirm call and another medium-term market timing system that's useful for swing traders called the DEW. So you've got rid of the bad ones. You've got some cash. It's now safe to buy in. What to buy? And some cherry-picking checklists and uni searches to find stocks that suit your objectives. So one of them is the worry-free methodology, and then of course there's more speculative methodologies as well. And then the last little bit, folks, is how to put it all together in a few minutes a day. And that's built into VectorVest. It's a video course with a downloadable book, and it's been professionally narrated, so you won't have to listen to me mumbling along. Now, in the US, they charge a fortune for that, but we're relatively new in the UK, and we're catching up fast, I'm glad to say. So if you roll up your sleeves, you work with me. That's what we're going to cover. It's £5.95. That's, if you're interested, vectorvest.co.uk/proven. And that includes 30 days access to VectorVest UK, US, Canada, Europe, and Australia. And that's worth £49 on its own. Now, after the 30 days, folks, VectorVest World will be debited from your card at £49 a month. So if you don't want to go ahead with it, then just give us a shout before that, and that'll be stopped. And I've been with VectorVest now 11 years. We've never had one single problem with a credit card in 11 years. So don't worry about that. And on our website, we advertise the number of the financial ombudsman. We are FCA registered. There won't be a problem with a credit card. So if you're there's the code, there's the link, vectorvest.co.uk/proven. That should take you to a landing page, and you can stick in your details very quickly. You'll have a login straight away. Now, included are lots and lots of group coaching. I do 4 sessions myself. My colleague Glenn does a session on a Thursday. We have a national user group, which Susan Thornborough takes. And we have an international user group run by Stan Heller out of Canada, which I contribute to. So, and I think the very, very first starting point in terms of support is that we have a telephone number that gets you through to our call center in North Carolina, and that's a free call, folks. So you can pick up the phone. It's open from 12 o'clock UK time to 12 o'clock midnight UK time. 12 hours open. So for any problems at all, pick up the phone and there'll be somebody at the other end of the phone. Okay. If you call UK time at about 2:30, 1:30, 2:30, that's America wakening up. So you definitely could go into a queue then, maybe 2 or 3. But if you call before 1:30, from 12 to 1:30, you go straight through because the Americans are still sleeping. If you call after 4 o'clock till 12 o'clock, then you'll pretty much go straight through. Okay, so you could easily get caught. Lots of people have done this, and quite a few people in the UK now. This gentleman's a farmer from the north of Somerset and Minehead way, and he's been in the market for 30 years. He's never made a cent in 30 years. He's been buying the top and selling the bottom for the last 30 years. Lots of people doing the same thing. So he's gone through the course, and he tells me he's got a written plan after all these years. vectorvest.co.uk/proven. On my Monday afternoon webcasts, I do my best to walk the talk, and I talk about the shares that I've got myself, and they've had quite a good run. Apart from those 2 gold stocks, which I lecture everybody on a Monday afternoon. The gold stocks are not for everybody. They have a temper on them that's quite aggressive at times. So they're a long, long way away from a worry-free stock. So, and you can get some ideas from what I do on a Monday afternoon. So if you don't think it's the best £5.95 you've ever spent, you give me a shout and I'll give you that £5.95 back with the greatest of pleasure. Okay. So if we go back, that's the course. It's built into VectorVest. VectorVest will do all the heavy lifting for you, and it's £5.95. There you go. vectorvest.co.uk/proven. Bruce, I think that you could customize your stop loss to suit you. By all means, yes, by all means. In my work, I'm just trying to follow the rules with the VectorVest stop loss. But VectorVest have done an awful lot of work on stop losses recently, and by all means, you can actually use, for example, the profit locker stop loss could work much better. But by all means, if you've got to a point where you're executing properly, then by all means, in your own trading plan, change the stop loss to whatever suits your own beliefs about markets. We don't trade markets really, we trade our beliefs about markets. As long as you don't change it every 10 minutes, Bruce. As long as you sit down for a weekend, think of what you're going to do, and then put that into practice for at least 30 trades. A lot of people, in fact, just change it randomly, and they think they've got a method, but they haven't. So folks, I just want to show you where you can find this. Anybody that signs up, you'll get an email, but sometimes people have already got VectorVest and they actually don't know where this is. So if you go to training, folks, you'll see the course that I just talked about under training, Successful Investing Quick Start course. Now, in terms of navigation, we have a navigation training series that opens up in a different window. It's done by Glenn Tompkins. It's done exceptionally well, and everything you ever want to know about VectorVest is in these videos. So on the home page, an awful lot of information on the home page. Market timing, how to get the best out of the stock viewer, how to build a watch list, charts, and then 3 sessions on Unisearch. The back testing, how to put together a portfolio, lots and lots of other stuff on here. So if you have a problem and you're not quite sure about Unisearch, if you click on these, you'll get an answer. Maybe the easiest way would be just to phone support and get them to talk you through it. So there you go, folks. Any other questions? Any questions, anybody? So those of you that are VectorVest subscribers, thanks for coming along. I know you've heard this before. And those of you that are brand new, I look forward to working with you. And anybody that's coming to the investment show in Hammersmith, just give us a shout. I'll be there all day on Friday. Yes, Lisa, of course you can. Of course you can. Can you trade exchange traded funds? Hard, by all means you can, but then you would be just trading them hard technically. Because the exchange traded funds, first of all, they only have to put down their top holdings, and secondly, and I could be wrong here, but secondly, they only actually have to tell their top holdings a quarter in arrears. So we can't do the fundamentals of those properly. So you'd be trading them purely technically. But yes, many people do trade exchange traded funds. We have a young man up in Scotland, Neil, who comes to all our meetings, who's an absolute genius. I was going to say a Zulu word there for a second, on exchange traded funds. I personally don't hard. I've been trading stocks before exchange traded funds existed. Maybe I'm too old to change. All right, but all I know is that if you've got a tracker, for example, it's an average. And there must be shares that are outperforming it and underperforming it. And I think I can find, with relative value and relative safety, those shares that are outperforming it relatively easily. Okay. And again, if you sit down with that, Excel spreadsheet and you work out the difference between making 30% and 18%, and you annualize and you add in the dividends. And Bruce, if you're in the US, you add in the income from the covered calls, you can find that you can, by compounding, you can actually grow a relatively small amount of money into a fortune relatively quickly. We're not talking about becoming a millionaire in a fortnight, but relatively quickly. So focus on shares that are growing. I get this question over and over, folks. How are we going to, in fact, beat inflation if inflation comes? Now, I've had young men nearly in tears that their money's going to go run away because of inflation. The best thing that we can sort out for inflation is to invest in a portfolio of stocks that are growing their share price, that are growing their profits strongly, and in fact, safely. One of our best trades over the last little while, I ran Games Workshop, for example. I ran it from £13 up to £106. It went as high as 130. So that's a heck of a long way above inflation. So they are there, and I'm hoping I'm going to get the same out of Cape Tech, plus many others. I like there's quite a few. By the way, on the VectorVest website, folks, at vectorvest.co.uk, if you go to the blog, I do a blog every Thursday, which I hope helps people along. And I also do a couple of YouTube videos every week that I hope helps people along. Okay, so you're not left on your own. We want you to be a customer and a subscriber for the next 40 years. So we want to take care of you, and we'll certainly take care of you in the next 30 days. Okay, folks, if that's all, I'll take my leave and have something to eat. Okay, have a great evening, folks. Take care of yourselves, and as I say, if you manage to get to Hammersmith, give us a shout. Bye-bye.